Well, thanks for tuning into the market wrap on what turned out to be a pretty brutal day for the bulls. I must say though that if you were an investor in the small caps, you might have been okay because it seemed like any other day. It's just that large caps and financials and discretionary took a really sharp knock, and as a result of which we stared at a 4% loss. Now, various statistics for this fall, steepest fall in X number of months. And despite this, of course, February turns out to be a series which has been the best in so many, etc. And that was the nature of the day today, right? Because you had all these stocks, like all the stocks on the Nifty 50 being in the red, and that is quite something, right? So, I mean, you would believe that even post this thing is the best February since maybe 2002, 2003 or thereabouts, what have you. But today was a brutal day. Now, before we analyze the individual constituents ourselves, let's just get in Mayuresh Joshi. He joins in right now to talk about his sense of the nervousness that we have in the markets and what could happen ahead. Mayuresh, good having you. Thanks for joining in. What's your sense, Mayuresh? A really tough day following global cues, no doubt. What now?
Afternoon, Niraj. Absolutely. Brutal day in the markets, and specifically the last half an hour selling, I think, was even more intense. So I think the culprit in terms of bond yields moving significantly higher in the US markets and the fear that has now got set off in the emerging markets, including India, where FI has been huge buyers over the last few months. Whether any readjustment happens because of the increase in bond yields in terms of the allocation between equities and bonds is going to be something that is going to be seen and witnessed over the next few days and weeks. So again, I think the FI figure today is going to be very, very interesting. But I think the kind of selling that we saw in the markets today, and if the yields do sustain at the current juncture in the US markets, even if the Treasury is giving out statements, Niraj, that they are not going to withdraw liquidity anytime soon, I think the yield movement has been pretty stark. And therefore, I think the fear on all these counts is probably getting played out on the market. So yeah, I think let's see. I think the next few weeks is going to be very, very interesting at the juncture that we are.
I would reckon, Mayuresh, that you would believe that the globe will determine what we do in the near term. But I heard you mention a week or 2 weeks. So would you reckon that it will be volatile, or would it be volatile with a very large negative bias?
No, so they've bought ferociously, Niraj, over the last few months. So I think if the withdrawal has to happen, I think the pace of that withdrawal is also going to be very, very quick. I think they're not going to be selling piecemeal quantities here and there because the moment in terms of how much, for what duration will these yields sustain, I think it's going to be a parking in terms of that duration itself over the next few weeks for investors who probably need to allocate their risks accordingly. So I think the sell-off, if it might happen, I think might happen very, very fast and very, very ferocious. We've seen that in earlier bull markets as well, where the corrections happen very, very swiftly. And then the markets tend to probably consolidate in a price and a time-wise consolidation mode as well. So might be, I think, a quick sell-off that probably happens. Then we consolidate, and then we probably look at leading sectors which can actually do well over the next few months.
Yeah, but it was interesting. I think Nicky will be joining us any moment, but it was interesting that today, while we've cracked 4% and actually our fall got exaggerated in the second half of trade, Europe is not doing all that poorly. And within our markets too, Mayuresh, today, small caps, the index just about crossed 2018 highs. It just fell about 0.75%. Who would have thought? So obviously financials and large financial leading the way downward. I mean, how do you believe the construct of the market would be in the next couple of weeks, even if we believe that volatility would be the key center point?
No, so absolutely, Niraj. I think the focal point here again would be how the US markets will behave. I think European markets naturally will follow to what the US markets will do at the closing and at the opening for the US markets as their time coincides. Yes, I think financials have taken the huge brunt in terms of the selling which has happened. So I think most of the constituents, whether it comes to financials, NBFCs, and specifically, I think even the Nifty, I think the main index itself is witnessing huge selling pressure coming through. None of the Nifty stocks closed in the green today, Niraj, but the broader markets is outperforming. So I think the investor interest that probably lies within the broader market still continues. But again, I think you need to be very, very specific in the next few weeks because I think the sell-off can also get exaggerated. It might start with the Nifty and then might continue in the broader markets as well.
Yeah, I think that's a very pertinent point. Okay, I think Nikki should be with us as well. Nikki, a question for Mayuresh?
Yeah, Mayuresh, I'd like to ask you at this point of time with the whole consolidation happening and probably a brutal day of trade, what is the kind of theme one could look at given the rise in yields that we're witnessing across the globe as a whole?
No, so I think what we are probably looking at is in terms of leading sectors where growth might continue. So I think being growth investors, our entire premise has been to look at earnings growth where the pedigree of growth companies might still continue displaying good top line and bottom line growth. Now, if you probably analyze the Q3 numbers and what also the budget has done, infrastructure stroke cement stroke rural infrastructure as well. So if I break that up, urban stroke rural stroke cement as a component, I think some of the leading stocks within these groups should continue doing well. On both counts, I think capital expenditure spending from the government expected to come through thick and fast in the next financial year. And earnings is going to aid their top line and bottom line growth very, very strongly. I think a lot of management commentaries have been very, very robust on this front as well. The second also would be, I think, what happens in terms of these high beta components. So if in the next few weeks and months, I think we get a good correction coming back and a lot of these leading stock claw back to the 50 moving day averages in the leading private banks, leading NBFCs. I think there again, I think the scope has been pretty strong as well. What the statements had been given out in terms of private players participating more in the financial sector and how these commentaries also have played out and how the earnings growth is expected to come out specifically an unlock phase over the next few quarters. I think these spaces also stand.
And what do you make out of this entire life insurance theme as a whole? Because, a couple of days we had Goldman Sachs, which came and initiated a coverage, a constructed coverage on most of these life insurance players. Do you think they're a good bet at this point of time, or do you think much of the rally is already done now?
So, Nikki, I think it's how you place yourself, right? Are you looking at the next 1 or 2 years? Because life insurance, even when you're taking the product, you take it with a longer time frame, right? From an investments perspective, I think the under-penetration is pretty stark. I think no two ways about it. Everybody knows about that. But again, I think new players to enter this space looks very, very improbable at this point of time. Secondly, I think when you're probably looking at a lot of these private guys actually starting to gain market share, the kind of products that they've got, the product mix that they've got, specifically in terms of the non-participating and the protection products that they are coming out. The new business, the business premiums that are coming through both on the individual and the corporate side as well. And the value of new business margins being very, very good. I think that itself is a very, very strong premise. Secondly, I think there are years of existence in this business, apart from, I think, a lot of entry barriers which come through. I think any incremental business which they probably add onto, right, and assuming their solvency and their ability to settle the claims as well, I think it will directly flow down from the EBITDA to the bottom line as well. So it's going to be accretive directly from a bottom line perspective of these insurance players. So growth stories, I think we love the insurance space from a long-term perspective.
Okay. Mayuresh, one final question. So the theme for the last 2 weeks has been the advent of PSUs. Would you reckon they can weather the storm even if the markets were to be a bit jittery?
So that is the theme, Niraj, and that theme might very well continue from a momentum or a sentiment perspective, right? But have a look at numbers. I think, except a few players, I think the numbers still remain very, very patchy for this PSU space. The second element that we are dealing here is the government execution part as well. What are the timelines that we are probably looking at? Is this going to get extended in terms of how that entire process is going to happen? And the third element, obviously, is in terms of how the markets itself are placed. So if such a huge supply of paper is expected to come through, at what valuations are you going to put that through, and is there enough demand looking at market conditions? So I think all these three factors should be working in favor. But yes, sentiment is probably very, very strong with PSUs. One more point, I think the dividends and the dividend yields, I think remain extremely, extremely robust for these companies as well. So I think it's something that can be looked at in terms of a dividend yield, but is that the only factor that you're looking at?
Okay. Mayuresh, we leave it at that. Thanks much for taking the time out and being with us today. And well, I hope the weekend is better than how the Friday was.
Happy weekend, guys. You take care.
Thanks, Mayuresh. Well, that sums it up, really. I think the terms that he used, brutal, and Friday was that. But as we said, the beauty was that the small caps did really well for themselves. So while we've discussed the large caps at length, okay, let me just very quickly, a couple of minutes before we wrap up, the broader end of the spectrum deserves a mention, maybe a large cap name as well. Nikki, any specific stocks in focus?
Yeah, there is barely I can hear you at this point in time. Seems to be a little bit of audio issue, but then what I clearly am picking up from the broader space, Neeraj, would be sale, because it's the HRC prices again have been picking up. We've seen momentum which was a little dull in the last a month or so, and finally you're seeing the HRC prices inching higher. The rebar secondary market also doing well, which has risen almost 9 to 10%. So these are of course the steel players have been hogging the limelight, and also South Indian Bank, which is planning to raise around 2.4 billion via shares sale to four insurers. That particular stock is also, of course, not to forget the fact that it's a mid-sized PSU and, of course, a divestment candidate by virtue of that. But again, a lot of traction building in for this counter, and we've seen 10.5% kind of up moves coming in for the counter. But apart from that, what are you picking up, and any themes that interest you at this point of time?
I mean, well, I think safety should be the order of the day. But just before we wrap, I think the beauty of today's trade would be what's happening to the world markets, Nikki. So let's just, before we wrap up, just look at the world markets, and they are not doing all that poorly. So Europe was actually okay, and Dow futures, after having corrected a bit, are right now trading flattish. So this, of course, shows you the spot. But if you look at the futures market, the Dow futures are barely in the red. So there's a bit of a recovery that has happened there. Let's see if that holds us in good stead, because Indian markets have had a really sharp correction in the session today. But that's all that we have the time, folks. Thank you so much for joining in today, from Nikki, myself, and the entire team that put this together. Thanks so much for tuning in. Have a great weekend.